When you hear the name Filinvest, you likely picture concrete. For decades, this legacy conglomerate built its fortune by dominating city skylines and turning empty lots into massive property developments. But right now, the capital inside the company is moving in a completely different direction. They are quietly funneling money away from traditional real estate and pouring it directly into heavy utility-scale infrastructure. The physical proof of this pivot is sitting on 18.85 hectares of the Filinvest industrial estate in Mindanao. It is the recently operational Misamis Solar Power Project, a facility with a capacity of 20.774 megawatts peak. Dropping over 1 billion pesos on 34,000 solar panels is a calculated financial move to capture a massive share of the Mindanao energy grid. To understand why this specific plant is such a high-margin asset, we have to look at the hardware. The company has installed advanced bifacial monocrystalline solar panels rather than standard hardware. This diagram shows how it works. Instead of absorbing direct sunlight only on the top surface, the underside also catches light bouncing upward from the ground. By capturing light from both sides, this technology generates up to 30% more energy than conventional panels. The placement of the plant is equally precise. The site was chosen for its flat terrain and high sun exposure, but it also sits immediately next to a National Grade Corporation of the Philippines substation. That proximity drastically cuts down the power loss during transmission. When you combine cutting-edge bifacial technology with hyper-efficient grid integration, you get a power generation asset engineered from the ground up to maximize profit margins. The Misamis plant is one piece of a much larger blueprint managed by Filinvest's utility arm, FDC Utilities Incorporated. They are actively executing an aggressive 10-year corporate roadmap. This illustrates the scale of their ambition. They plan to triple total power generation capacity, starting from a baseline of 411 megawatts and scaling up to 1,350 megawatts by 2033. The infrastructure spans across the rugged, mountainous borders of both Nueva Vizcaya and Pangasinan. This is designed as a run-of-river hydro system. Instead of impounding water behind flood-inducing dams, it harnesses the natural tilt and flow rate of the river itself to spin the turbines. Pulling this off requires intense engineering and heavy capital. Crews have to excavate and construct extensive underground headrace tunnels to channel the water to the powerhouse. The project schedule targets a 3-year construction phase that establishes a 25-year operational lifespan once the water starts flowing. Because solar farms only generate power during the day, this run-of-river hydro plant perfectly complements the portfolio. It creates a diversified, round-the-clock energy pipeline for the company. To build all of this, we have to look at the capital markets. How exactly is Filinvest bankrolling a multi-billion peso corporate transformation? The bridge between their ambition and their bank account is a recently filed prospectus for SEC-registered Philippine peso-denominated perpetual preferred shares. This breakdown displays the math of the capital raise. They structured a base offer of 6 million shares with a 2 million oversubscription option, priced at a premium of 1,000 pesos per share. That brings the total target up to 8 billion pesos. For retail investors, these shares will trade under the tickers FDCPA and FDCPB. As preferred shares, they are non-voting, but they are accumulative, meaning they are engineered specifically to prioritize and yield stable dividends. This is the core investment thesis. By purchasing these preferred shares, the retail investor is effectively acting as the bank, fronting the cash required to build out Filinvest's renewable energy pipeline in exchange for a reliable, predetermined slice of the profits. If you are looking at this as a long-term dividend play, you have to ask the ultimate question: how secure is the underlying cash flow that pays those dividends? For the Misamis Solar Project, the company holds a 25-year solar energy operating contract officially awarded by the Department of Energy. That contract legally locks in 2.5 decades of predictable, government-backed revenue. It totally insulates the project's cash flow from short-term market volatility. A machine is now fully assembled. Filinvest is raising up to 8 billion pesos, deploying it into high-yield bifacial panels and hydro tunnels, servicing a grid desperate for power, and backing the entire operation with a 25-year government contract. They are methodically transforming from a property developer into a dominant green utility player. Review the FDC Prospectus, Evaluate the dividend math for yourself and let us know in the comments below if you are adding this energy infrastructure to your portfolio.